it's a kind of a fluke of reporting that we're required to report that particular holding. And like I say, we own 4 or so others in international securities. We don't make any great judgment about China. You probably know more about China than I do. We simply look at investments around the world and we try to buy into things that we think offer the most value. We would regard in the United States as number one because we understand the game the best here. You know, we think we understand something like the oil business in China reasonably well. The country, you know, has obviously different characteristics in many respects than the United States, but the company is very similar to big oil companies in the world. They produce 80 or 85% as much crude daily as Exxon does, as I remember, and it's a big company. It's fairly easy to get your mind around the economic characteristics. And they do one thing that I particularly like, is that they tell you they will pay out X percent. I think it's 45% of their earnings. I like the idea of knowing in a big enterprise like that 45% of what they earn is going to come to Berkshire. It was bought simply because it was very, very cheap in relation to earnings, in relation to reserves, in relation to daily oil production, in relation to refining capacity. Whatever metric you want to use, it was far cheaper than Exxon or BP or Shell or companies like that. Now you can say it should be cheaper because you don't know what will happen with it 90% owned by the government of China. And that's obviously a factor that you stick in valuation. But I did not think that was a factor that accounted for the huge differential in the price at which it could be bought. We aren't there because it's China, but we're not avoiding it because it's Chinese.
If a thing is cheap enough, obviously you can afford a little more country risk or regulatory risk or whatever. This is not complicated.
They say they're going to pay out 45% to you in dividends, don't have unusual amounts of leverage. If you're buying something like that at well under half what, maybe a third of what comparable oil companies are selling for, that's not high-level stuff. We put about $400 million into it. It produces about 3% of the world's oil, which is a lot of oil. It produces probably 80% or so as much as ExxonMobil will produce. And it's a huge company. Last year it earned $12 billion. Now, if you look at the Fortune 500 list, my guess is you won't find more than about 5 companies in the United States that earn $12 billion or more. So it's a major company. At the time we bought it, the total market value was $35 billion. So we bought it at about 3 times what it earned last year. It does not have unusual amounts of leverage. They say they will pay out about 45% of the amount they earn. So if you can buy it at 3 times earnings, would turn out to be 3 times earnings, and you get 45% of 33%, you're getting a 15% yield on your cash yield on your investment. It's a very good annual report. Chinese government owns 90% of the company. We own 1.3%. If we vote with them, the two of us control the business. And it's a very major business at a very, very attractive, at what was a very attractive price. We would have bought more, but the price jumped up. It's a very major enterprise. It employs almost 500,000 people. And the interesting thing was, a few years ago, relatively few people in the investment world probably even thought about the fact that PetroChina was over there and was a much larger business than most of the, well, just about any oil company in the world except for BP and ExxonMobil. Charlie, do you have any thoughts on it?
It would be nice if this sort of thing happened all the time, but that hasn't been true in recent years.
The annual report of PetroChina, which, like I say, it's easy to read, understandable. They declare their policies. Anybody could get it. You can read it. It's right there in black and white in a report that anybody can get. And we just sit in the office and read those things, and we were able to put $400 million out that's now worth about $1.2 billion or something like that. Yukos, which is the big oil company in Russia, was probably far better known among the investment community in the United States than PetroChina. And I compared the two at the time, thought to myself, would I rather have the money in Russia or have it in China? PetroChina, in my view, was far cheaper, and I felt that the economic climate was likely to be better in China. Would I have, if it had been selling at the same multiple as a U.S. domestic company, would I have regarded it as more attractive? No. I mean, there's some disadvantages always to being in a culture that you don't perfectly understand, or where tax laws can change, your ownership rules can change. But the discount at which PetroChina was selling compared to other international oil companies was in my view at the time ridiculous. So that's why we bought it. It's not hard to understand crude oil production and refining and marketing and the chemical operation they have. I mean, you can do the same thing with Exxon or BP or any of them, and I do that with all. I look at them. And I came to the conclusion it's worth $100 billion, and then I checked the price and it was selling for $35 billion roughly. Now, if I thought the company was worth $40 billion and had been selling for $35 billion, then at that point you have to start trying to refine your analysis more. But there's no reason to refine your analysis. I mean, I didn't need to know whether it was worth $97 billion or $103 billion if I was buying it at $35 billion. So any further refining of analysis would be a waste of time when what I should be doing is buying the stock. So we really like things that you don't have to carry out to 3 decimal places. If you have to carry it out to 3 decimal places, it's not a good idea. That's all I'm looking for, is something that's financially fat. And whether PetroChina weighed $95 billion or $105 billion didn't make much difference. It was selling for $35 billion. If it had been selling for 90, it would have made a difference. So if you can't make a decision on something like PetroChina off the figures, forget about going further. And that's basically what we did. It's a straightforward report, just like reading just like reading Chevron's or ConocoPhillips or anything like that, just as informative. The PetroChina decision, just as we made it to buy it at a valuation overall of 35 or to 40 billion when we thought it was worth 100 billion, when oil was at $70 a barrel, roughly 75, I figured the value was about 275 or 300 billion, and we could sell it at that price. And we no longer felt it was undervalued compared to other oil companies, so we sold our stock. Now, incidentally, right after we sold it, it went up dramatically and it became very popular. And at one time, PetroChina became the most valuable company in the world measured by market value, which would have come as an enormous surprise to investors 7 or 8 years early. So they've done a terrific job. And if it went down to a price that we thought was a significant discount to its valuation, we would buy PetroChina again.